Welcome to this session on the blockchain revolution. Before we go deeper into the topic, let's have a look at the risk disclaimer, risk warning. Forex and CFDs are leveraged products, involve a high level of risk, and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you're prepared to lose. Before deciding to trade, please ensure you understand the risks involved and take into account your level of experience. Seek independent advice if necessary. Have a look at the rest of the disclaimer, and bottom line really is, if you have any questions about the risks involved in trading CFDs, cryptocurrencies, Forex, and so forth, just reach out to the ladies and gentlemen at Blackwell. They will be able to help you, a lot of competent people there. So don't worry, just reach out to them. They will answer all the questions you may have. These are exciting times, very exciting times indeed, because what we see right now is nothing less than an asset class being born. So what does that actually mean? Let's think about the asset classes that we're quite familiar with. You look at um, stocks, for example. We look at Forex. We look at gold, silver, precious metals. These are all established asset classes. And what doesn't happen every day is that a new asset class is being added into the mix. And now that's exactly what's happening with cryptocurrencies. And I picked a picture with this golden egg. There's a lot of cryptocurrencies that are coming into the market right now. But ultimately, we don't know what kind of the most successful cryptocurrencies will be in the future. Nevertheless, what we do know is that these are unbelievably exciting times because we are at the early stages of that blockchain and cryptocurrency revolution, which means nothing else than there's a lot of opportunity out there. And when you look back at 2017 and you see the really massive rise in the value of any cryptocurrency, and also then the setbacks we had and kind of a stabilization afterwards, that's quite impressive, isn't it? And there has always been a lot of opportunity on the upside and the downside of the cryptocurrencies. And the kind of a smart thing with CFD is you can speculate on both. You can speculate on prices rising, but you also can speculate on prices falling. It's not like just investing in a physical stock, and that makes this asset class very, very attractive for day traders. Because what we have seen in the past, and we most likely will continue to see, is a lot of volatility in the market, extended volatility in the market, and that just creates opportunity at the end of the day. We need to adapt, we need to learn, we need to understand, what are the basics of cryptocurrencies. Are they safe? We have run one session on that topic. Feel free to have a look at that. We also look at blockchain in this session. We look at the different cryptocurrencies that are available and their kind of different characteristics. So we have some learning to do. There's no way around that. Also have a look at sessions we run on technical analysis, short term, and maybe some more kind of medium to longer term trading strategies. So there's a lot of excitement and a lot of buzz right now around cryptocurrency. A buzz that I personally haven't seen for many years. Maybe the last one that I've seen that was a bit similar was the introduction of automated trading. But this now is in a different league, quite frankly. There's a lot of interest out there, and we hope we can do a good job and helping you to demystify all kind of buzzwords that are being thrown around and get a much better understanding of what's what in the world of cryptocurrencies. And blockchain is one of these terms that's being used quite a lot, and a lot of people don't actually know what that means. I think the people who invented Bitcoin are very, very smart. Kind of one of the smart things they did is they created this logo for marketing purposes. And look at it, it's a bee on top of a coin. The color is golden, and you see kind of the lines coming out on the top and on the bottom of the bee. So that is a lot of kind of trusted concepts that we appreciate, and that we are used to. So one concept is the concept of a coin. This looks a bit like a pound coin or a 2 euro coin. So that in itself already is something that we associate with value and stability, and we can touch it, right? It's physical, and you can have it in your pocket. So immediately you think, this is valuable. Then look at the color; it's in gold, right? And that's another association with a value that we attribute to gold. And thirdly, that B, that uses the lines that we know from currencies like the US dollar, and the lines are supposed to symbolize stability. All that together, whenever you or I look at this marketing picture of a Bitcoin, you feel like, yeah, there's something to it. It has some value, and obviously, it's nothing else than marketing, because you will never be able to put Bitcoin in your pocket like you can with a pound. It is, and that's what I like about this particular picture. It's something virtual. It's a zeros and ones that are sitting on a computer, on a hard drive, and there's highly secure kind of transactions that sit behind that. And that's what Bitcoin really is. And a lot of that has to do with processing power. And that's something we will demystify in this session. And thanks for joining today. So processing power, that is really what it comes down to at the end of the day, with a lot of the innovation that we see out there in the market. A lot of that would have not been possible years ago when you think about, let's say, a Commodore Amiga or the first PCs out there, or I can still remember back in school I was using a Texas Instruments TI-30 to do my calculations in mathematics class, and that was already some sort of innovation. But the calculating power of these devices was so limited, right? Was so limited in nature that any smartphone, even if you have an outdated smartphone, but especially if you have a modern iPhone or modern Samsung, the processing power that is packed into these little clever devices kind of well exceeds hundreds and hundreds, of combined computers from back in the days of 80s and 90s, especially 90s. I think before that we didn't really have a lot of personal computers. Um, and that is just something that it has exploded, and also through the application of internet and cloud. So it's now much more possible to also use the decentralized nature of the internet. What I mean by that is, if your computer is connected to the internet, you can make your processing power available. And if a million people do that, suddenly, boom, you have a supercomputer, and the individual kind of offering that processing power doesn't even realize that. On MetaTrader, by the way, there isn't even a function that allows you to connect your MetaTrader to the cloud, and in turn you can use it for your backtesting, and turn your simple PC into a supercomputer by using the cloud. And that's the whole idea also behind kind of blockchain and cryptocurrencies, that we use the capacity of the global internet and everybody's kind of computing capacity to make this technology possible. And what we avoid doing is we avoid that somebody needs to have like a massive computer center or data center in Palo Alto or somewhere, where all the bitcoins are being stored and all the transactions are being done. That would really slow down the system, and more importantly, make it very, very intransparent and expensive. And that's something that you don't have with blockchain. So let's have a look at the concept, and let's stay on this page for a while to clearly define, what's the current system versus the system based on blockchains and bitcoins. So on the left-hand side, you see the very traditional system that we are all used to in financial services. You have with that kind of Greek temples, pictograms on the left, and in the middle a clearinghouse. You have four different parties that take part in any transaction. So that could be, for example, you are based in the UK, but maybe you're on holiday in Malaysia, in Kuala Lumpur, and you go to an ATM and you want to withdraw some money. So that bank will then, in Malaysia, will contact with your bank details and your PIN, kind of a central clearinghouse in Europe, who will then contact your local bank, and with the data they identify you as, first, being somebody kind of who's validated in the system, and second, you have sufficient funds to make the transaction. And then what will happen eventually is money will come out of the ATM, and that's actually quite quick transaction. The problem with these kind of transactions is that they're quite expensive. But so they're being run through a clearinghouse, kind of, and all the different entities that participate in that transaction are connected to that clearinghouse, and you will have to pay for literally everything. Right? You pay for a transaction fee, and you also pay a really bad conversion price, because that's where the banks kind of make money out of these international transactions. And you also see kind of in the middle of that clearinghouse, there's also kind of a line coming out down, and with a piece of paper with some kind of bars on it and some notes on it. And the idea here is that information is also being made available to the regulator, and the regulator has put certain rules in place and how banking transactions should happen. Um, and the regulator can have insight into any transactions that the regulator wishes to see. And there are so many different regulators out there. There are national regulators, there are international regulators, and so forth. And everybody wants to make sure all the rules are being applied. So that creates a really, really slow, expensive, and intransparent system based on trust rather than kind of facts and transparency and evidence. That's the current system that we have. And on the right hand side, that's the new system. That's the blockchain revolution. So rather than going through a clearinghouse, you can see on the right hand side, you can see a lot of these pictograms that I associate with the regulator. So everybody, not just the regulator, can see the transaction. So imagine that there is a transaction that I was just talking about between Malaysia and the UK. Imagine that 1,000 people see that transaction happening at the same time. So it will be very, very very difficult to convince 1,000 people that they've seen something wrong in terms of the amount, in terms of the currency, in terms of kind of the nature of a transaction. It will be very, very difficult to convince 1,000 people that they've seen just an illusion, and that's what makes transactions through blockchain and cryptocurrency very, very safe, because everybody has a copy of a transaction, and everybody can check their copy with kind of the main ledger, which is nothing else than the blockchain, and thereby creating probably the safest currency out there on the planet, or the system to transact money. And the currency that sits behind that is blockchain. And regulator, well, if a regulator wishes to see the transaction, they can do so in real time at any point they are interested. So let's just summarize what we've learned and what we've seen. First, the old system, where you transfer money through a banking system, it's based on trust. You just hope that all the institutions and the regulators have made the right decisions, and set up a system that you can trust. It is unbelievably expensive. Think about all the transaction fees that you've paid in the past and the bad currency conversion rates that you had to incur. It's unbelievably slow. It maybe works for an ATM transaction, but try to transfer more money than, let's say, £10,000, dollars, or euros from A to B, then it suddenly gets very, very complex and difficult and unbelievably slow, and it can days until a transaction finally settles. With Bitcoin, that's very different. Transactions are safe through the high level of encryption and the complete anonymity that we have in a transaction. They're cheap because you cut out all the middlemen and you just connect the two transacting parties with each other regardless of where they are based on the planet. And it's fast. And depending on the cryptocurrency that you use, it can be super fast or can be just fast in terms of settlement and translating a Bitcoin into a local currency. And that maybe is also a case, when you want to speculate on the value of Bitcoin and you trade in real Bitcoins. It can be very, very slow, and in Bitcoins, it can take a couple of hours until a transaction settles. With CFDs, that happens in seconds, right? There's no other way. That's how they've been designed, and that's why they're so attractive. So when you think about your current portfolio and the trading, Bitcoins maybe kind of in e-wallets and in real Bitcoins. Have a think about CFDs. Have a think about the leverage that is offered there that can make your investment kind of more efficient. Obviously, it also comes with associated risks, but also the settlement time is so much faster and efficient. And regulation also. In another session where we talked about is cryptocurrency safe, we talk a lot more about regulation. I will give you a quick overview at the end of this session as well. But the regulation is so dynamic in each country, and it can make sense to think about, you know, getting under the cover of CFDs and take the advantage of the regulation that is available through CFDs. So basically, when you think about blockchain and Bitcoin, forget everything you know about financial transactions because everything is really completely new. Let's do a bit of a quiz, let's make this real and have a look at some charts. So we have a cryptocurrency here in 2018. It had a market valuation of 37 billion, which is quite sizable, quite a lot, right? But you also see how that value has come about, right? So we have literally a flat line for 2013, 2014, 2015, 2016, and then all out of a sudden in 2017, something is happening. And I can also remember, the whispers and the story that surrounded this particular cryptocurrency, and suddenly went through the roof from zero to above $3 per coin. And it doesn't sound a lot, but if you have 10,000 coins at 0.001 cents, and this thing goes up to $3, boy, that goes up in value, and a lot of people have been made rich in a very short period of time because they managed to get enough of that particular cryptocurrency into their e-wallet or into their trading positions. So the question is, what is the cryptocurrency that sits behind that? And I'm sure many of you will already have identified what it is. It's the so-called Ripple. We'll talk at the end of this session a bit more about kind of what's the advantage of Ripple, but already in a nutshell, traders absolutely love Ripple because it almost emulates what we know from FX or indices trading in CFDs. We have low margins, we have tight spreads, we have fast execution, and I will talk a little bit more about the system that stands behind Ripple that enables all that. So Ripple is something you really should remember, and if you never heard that, I would not be surprised if you have not heard it. Take note. Ripple is something that is surely here to stay. So the next one, much higher market capitalization, 182 billion, and you can see also that we had kind of a long time there was literally no increase in value in that particular cryptocurrency, and then all out of a sudden this thing goes through the roof and has a whopping 2018 market cap of more than 180 billion US dollars. Think about that, 180 billion US dollars. That is a very, very large amount of money, a lot of liquidity, and enough for us to get excited about it from a trading perspective. I mean, look at the value, we almost peaked at 20,000 US dollars, and you probably have guessed it. This is Bitcoin, our good friend Bitcoin, where we saw kind of a value rise from nothing to that high level. And some of you may have heard the story that kind of the first Bitcoin transaction, the first commercial one was one where for 10,000 Bitcoin somebody purchased a pizza. And imagine, if Bitcoin was at 20,000, what amount of pizzas you would have been able to get. You probably would have bought Domino's Pizza and a couple of other chains at the same time for that amount of money. But so that's how it goes, right? And value has just had this meteoric rise. We also had a setback by now. Actually, the setback was much deeper, almost down to the 6,000 000 level. We bounce back more direction 10,000 again. So let's see how that kind of ends up. But something we can already say about Bitcoin is, it has gone up too fast, too much, and it also has gone down too fast, too much. And that's kind of a typical rubber band theory that we see in any meteoric rise of a financial instrument. Also, we've seen a similar development with gold, right? When gold went up to 1,940, suddenly very quickly we had this massive setback, and it's now kind of trying to stabilize. So maybe what I can encourage you to do already is to overlay a gold chart with a Bitcoin chart and see, how much comparison you can identify. A lot of traders kind of like that kind of comparison. That gives them an idea how the market has reacted in a similar situation in the past. So that's good old Bitcoin. And let's have one more. Let's look at that one. Still 86 billion in market cap. And quite interestingly, when you see the movement, kind of the same thing, flat line suddenly jumps up massively from nowhere to above 1,000. But this one has not really shown the same level of setback. We also had a setback in the meantime, but not the same level of setback that we've seen in Bitcoin. And so something must be different. And that's also something I want to discuss with traders today. And what we have here, you may have guessed it already, is Ethereum. And Ethereum is quite interesting, and I will have a bit of an overview at the end of this session. But I already tell you that Ethereum is quite interesting from a blockchain perspective because it stores a lot of kind of that information about a transaction in a what's called a node, kind of in the different kind of points in the blockchain. And the more information you can put into a blockchain, the more commercial applications you will be able to think of. And that's why Ethereum has an enormous amount of potential. Kind of in simplistic terms, what we know is that a lot of insurance companies right now are really interested in this concept. And when you think about a car insurance, just insuring a ride in a car from A to B through a blockchain is something that is quite attractive, but that also requires a lot of information to be stored in a blockchain. So now let's have a look at the cryptocurrencies that are available through Blackwell. And it's quite diverse range. So you can see on the top, we have Bitcoin. It's there 3 times. Why? Because you can trade Bitcoin against different currencies. So it's denominated in US dollars, pounds, and euro. You see the next one, DSH BTC, where you can also trade different correlations between cryptocurrencies directly. Here that would be the Dash and the Bitcoin. ETH is what we discussed. That's Ethereum, LTC, Litecoin, XRP, Ripple. Again against different currencies. And so let's have, if you want to have a look at the kind of a list that's currently available, go to the Blackwell website or download a demo and have a look at that market watch window. Make sure you show all and you kind of refresh the information to see kind of what's the current portfolio of cryptocurrencies available. But what I definitely want to discuss with everybody today is kind of what are the differences between the cryptocurrencies available. First, Bitcoin is just the good old Bitcoin, available since around 2008 as the first cryptocurrency being issued. Uses the blockchain technology, uses the mining, and we talked about safety in cryptocurrency. So have a look at that video where we discuss mining it in a bit more detail. The problem of trading it is that the margin requirements can be quite steep and the spreads are wide, right? So that makes it difficult for CFD traders to benefit from it. It's not impossible, absolutely not, but you need to have a fairly sizable account to do that with typically what is a large margin requirement. So that's why Litecoin got introduced, because Litecoin basically is the little brother to Bitcoin, highly correlated, kind of smaller in value, that creates lower margin requirements and a tighter spread. And some people say Litecoin is silver and Bitcoin is gold, kind of to create that comparison. They're correlated, they're connected with each other. Some traders, and we have a session on trading strategies on that, where you may want to have a look at correlation strategies. Some traders look at the moment where maybe for a short period of time the correlation breaks between Bitcoin and Litecoin and kind of trade the spread. Where the price has gone up, they would go short, and where the price has gone down, they would go long. with the expectation that we revert to the middle again, to a higher level of correlation. And especially in the kind of early days, that's where we still are, of cryptocurrencies. These are, typical ideas everybody's going through to identify kind of a reasonable, kind of good risk reward scenarios. I don't dare to say arbitrage opportunities, because there are not a lot of arbitrage opportunities, real arbitrage opportunities out there. But there is some scope to think about, how do these different cryptocurrencies interact, and what is a fairly good risk reward scenario. Ethereum, we talked about it. It's a fantastic innovation, and the virtual machine that sits behind that enables you to store a lot of information on each node and about a transaction, and that creates kind of literally endless applications from a commercial point of view. And that's why a lot of organizations that think about commercial applications actually look into Ethereum. Ripple is something we like as traders. Why? What sits behind that is all called real-time gross settlement system, the RTGS. And the idea here is that it uses not the distributed ledger approach from a Bitcoin, but it uses one ledger, and this ledger is being validated by other systems. In other words, you can also have access to that system, kind of download a copy of RTGS to your computer and validate. And there is no kind of mining requirement behind that, and that enables us to have very, very fast transactions. So it's a bit more like a clearing system is not as transparent, but it's one central system. And from a trading point of view, that's actually something that we like, right, as traders. That's why we have very tight spreads, we have very low margin requirements, and still very good volatility. Be careful, the correlation between Bitcoin and Ethereum and Bitcoin and Ripple is quite limited. So you want to uh, really make a good assessment. There are some customized indicators available from Blackwell that can show you kind of how these correlations work if you want to identify potential trading opportunities there. And look, it doesn't stop there. Blackwell has been quite good at exploring kind of other cryptocurrencies and added them to their portfolio. Monero, Dash, and so forth are available. You can directly trade kind of correlations or between the two cryptocurrencies. You don't have to go kind of via a currency and, let's say, trade a Bitcoin long and another currency short. You can also then trade directly that pair of cryptocurrencies. That's a bit like for currency traders who see this when you think about, let's say, you go euro US dollar long and you go GBP US dollar short. Basically, what you do is you create a Euro GBP position, right? At the end of the day, you could kind of take USD out of the equation, and that's basically the same idea here, and that makes for more efficient use of your capital. And also the cryptocurrencies are denominated in different, I call them real currencies. That makes it easier to trade through your account and kind of have a kind of like-for-like comparison. And it is mainly, from my point of view, it is a question of liquidity, because obviously, you don't need to have US dollar in your account when you trade BTC USD. But it's interesting to have different options available, because there can be obviously also a quite positive currency effect. So in summary, I'd say these are really, really exciting times. Blockchain has absolutely started transforming the financial services industry, and not just that, also in manufacturing and other areas. So everybody is right now looking at blockchain and its applications. Everybody is now looking at cryptocurrency. What is blockchain? Blockchain, again, is kind of, it starts with that idea from Satoshi Nakamoto of a distributed ledger, that we cut out the middleman and we connect the people who make the transaction directly, rather than relying on a system that's based on trust, which is very intransparent, slow, and expensive. So that's cool. That's really, really cool. And obviously, large organizations are really worried that that will completely kill business models or at least transform business models. So that's why everybody is looking at it, and it's here to stay. You know, we in terms of transactions, we're really moving completely away from physical currency in some sort of different means of transacting. And I think everybody's also concerned that, you know, when you kind of use contactless payments and cards and so forth, all that goes through a clearinghouse, all that kind of goes through the institutions, and to have no alternative is quite depressing sometimes. Now people can vote with their feet, and if there is an effective way to either transfer Bitcoin into kind of local currency, or if kind of more organizations accept cryptocurrency, that will just, you know, without the regulator doing anything or organizations do anything, that will just transform the market like the internet has already transformed our behavior, and phones have already transformed our behavior. But to be specific, I showed you a number of different cryptocurrencies. We looked at the Ripple, we looked at Ethereum, we looked at Bitcoin itself, and we're talking about the differences, correlations, and also have a look at, you know, from a safety point of view, I have recorded another session on that topic. We also talk about margin requirements in a separate one, and kind of the transaction costs that come with that. That's something I would also recommend you have a look at. And finally, please have a look at the sessions we've done on short and medium and long-term trading strategies, where we just give you some food for thought, you know, starting point to see, you know, how you can potentially design a trading strategy to capture the opportunities that are out there, because this is new. A new asset class is being born, and these are exciting times that don't come every day. So I thank you very much for having kind of visited this session and watched my overview of the blockchain revolution. I hope you found that interesting. Please let me know if you want us to add other topics to this educational section. Very happy to do that, and I wish you all the best for your trading. Thank you very much.